Hello everybody, welcome to the Roblox IPO. This is awesome. Happy Thanksgiving to everyone out there in the United States who is celebrating Thanksgiving today. This is the RBLX. That's going to be its ticker symbol, stock analysis. This is StockerFinance. I'm your host, David Scheuer. Make sure to follow me on Twitter at StockerFinance, patreon.com/StockerFinance to support the channel. Now we're going to be looking at the registration form, the Form S1. This is a form filed through the Securities and Exchange Commission here in the United States. And if we move on just through the overview of this company, if you don't know what Roblox is, let me give you a little description of it. We'll also read the story here in a minute. But Roblox essentially is a video game platform that's online. I played this all the time as a little kid, so the fact that they're IPOing was honestly quite funny to me at first. But looking at their financials, how much revenue they're doing, their bookings, operating cash flow, daily active users, you can just look at the statistics right here. It's pretty impressive for this company. I mean, 31.1 million daily active users, 22.2 billion hours engaged, 589 million in revenue, 1.2 billion dollars in bookings, 345 million dollars in operating and cash flow. Those are some pretty impressive numbers that I would not expect to see with a company like Roblox. I did not realize how big this gaming platform is, so it's super interesting. Let's go ahead and read the overview. Now, usually I don't read the overviews or I just skim through it, but this one is really interesting and I thought that everyone should hear it. So if you want to just sit back and relax really quickly, I'll go ahead and read through the story because it's quite interesting. The story of Roblox began in 1989 when our founders, David Brzezowski, definitely pronounced that wrong, and Eric Cassell programmed a 2D simulated physics lab called Interactive Physics. This would later go on to influence our approach to building the groundwork for Roblox. Students across the world use interactive physics to see how two cars would crash or how they could build destructible houses. Starting Roblox in 2004, we wanted to replicate the inspiration of imagination and creativity we saw in interactive physics on a much grander scale by ushering in a new category of human interaction that did not exist at the time. An average of 36.2 million people from around the world come to Roblox every day to connect with friends. Together, they play, learn, communicate, explore, and expand their friendships, all in 3D digital worlds that are entirely user-generated, built by our community of nearly 7 million active developers. We call this emerging category human co-experience, which we consider to be a new form of social interaction we envisioned back in 2004. Our platform is powered by user-generated content and draws inspiration from gaming, entertainment, social media, and even toys. Some refer to our category as the metaverse, a term often used to describe the concept of persistent shared 3D virtual spaces in a virtual universe. The idea of metaverse has been written by futurist and science fiction authors for over 30 years. With the advent of increasingly powerful consumer computing devices, cloud computing, and high bandwidth internet connections, the concept of metaverse is materializing. Our Roblox Human Co-Experience platform consists of the Roblox Client, the Roblox Studio, and the Roblox Cloud. Roblox Client is the application that allows users to explore 3D digital worlds. Roblox Studio is the tool set that allows developers and creators to build, publish, and operate 3D experiences and other content accessed with the Roblox Client. Roblox Cloud includes the services and infrastructure that power our Human Co-Experience platform. Their mission is to build a human co-experience platform that enables shared experiences among billions of users. We are constantly improving the ways in which the Roblox platform supports shared experiences, ranging from how these experiences are built by an engaged community of developers to how they are enjoyed and safely accessed by users across the globe. All right, so super interesting story there. I just thought everyone should hear that because this company is very fascinating, especially as someone who played this as a little kid. Tons of my little cousins and friends play this, Roblox game. What's so interesting about this platform and this game is that it's not just a singular game. It's essentially like an app store, and people are using that app store to develop things within the app store. So, you have the app store, and then you have developers who make different apps, different games, which people can then play on an iPhone or through the app store. So that's kind of how I view Roblox. But I see this becoming a much larger thing. I can easily see Roblox getting really involved in VR and augmented reality platforms where you are communicating and hanging out with friends, but in a virtual world. Because if there's another pandemic or if the situation gets worse, people still need social and human interaction. If we can't get that in person because of a fear that we're going to die from a deadly virus or something like that, well, then we definitely need still ways to communicate and interact with the people. And one of the ways could honestly be through Roblox with a 3D generated character. And even though the Roblox graphics aren't, hyper realistic, I know the technology is out there and is evolving every day for the hyper realism. And Roblox could easily use its platforms and its plethora of 7 million active developers to create something really unique and special there that could also profit from. And as an investor, that's something that I am very interested in. However, the financial situation for this company is a different story. But first, let's talk about their growth strategies just really quickly. Platform extensions, their first key growth strategy. They're constantly investing in Roblox platform. They're just trying to basically make the platform better. Age demographic expansion. And this is one of the big worries I had. I know that the biggest demographic for this company is really young. And those kids are growing up. So they either need to keep getting new kids and marketing to new families, etc., with new children in order to keep the same amount of daily active users on their platform, or they need to somehow also, get engaged and appeal to an older age demographic so that when kids do grow up and if they get tired of Roblox, they can still use part of the game or part of the platform or whatever it may be, maybe a different game within the platform that they'll be engaged with, and that they won't end up leaving the platform for good. So they believe there's significant potential for them to increase penetration and engagement across all age demographics, international reach. They're addressing an opportunity in China through Lubu, a wholly owned subsidiary of the joint venture. So this is an affiliate of Tencent. Sorry, I always pronounce some names wrong during these videos, but they have seen they're in markets like US, Canada, and United Kingdom. So they have a lot of places that they could grow and expand their technology, especially I believe in India or China or places that have, or even like Russia. Honestly, I think Roblox could really do well in places that have super high populations in a very, very large geographic landscape. Because if you have family that lives on the other side of the country, you're not able to see them all the time, well, perhaps you could play with some of them and talk to them through Roblox and interact with them, play games, etc. I could definitely see that thriving in other countries. Revenue. So let's go in and look at the numbers here. Revenue is increasing. That's great. From 2018 to 2019, it increased from 312 million to 488 million. And then 9 months ended, we were at 349 million in 2019, increased dramatically to 588 million, almost 100% increase in revenue there in 2020, largely driven by significantly more people playing Roblox now that they're stuck at home during the lockdown and the pandemic. And many schools are shut down, which means kids, of course they're still taking some classes online, but most kids these days are just playing video games at home and hanging out with their family, rather than doing a lot of intense schoolwork and stuff like that. And so Roblox is definitely one of the ways that they're able to interact with friends, that they're able to meet new people online, and just in a way to entertain themselves when there's really not that much to do these days. So cost of revenue also increased there. This is a problem with this company, is profitability and sustained profitability. This is probably something I've mentioned in the past 3 or 4 IPO analysis videos. They all have a profitability problem. The future is looking a little brighter, but for Roblox, it is not looking super bright when it comes to profitability. Cost of revenue is one of the main things that was also driving Wish, the last IPO analysis video I did, which you should go check out. It's also a problem for Roblox here. So 9 months ended September 30th. In 2019, they had 82 million in cost of revenue. That increased to 150, or not million, sorry, or yeah, million. That increased to 154.912 million in 2020, and only 9 months ended September 30th. So it's going to continue to increase for this year. In 2019, they did 117 million for cost of revenue. So I could easily see that hitting close to 200 million for cost of revenue, which would dramatically eat into their profits. And it's going to make it really hard for them to be a profitable company, especially when all the other costs and expenses add up to $794 million, significantly greater than the revenue, $588 million in 2020. And that's just 9 months ended of September 30th. So either I need to do a lot more revenue to make up for that, or other than that, they're just going to be operating at a loss this year, which is most likely the case. And if you look at the past years in 2018 and 2019, you can see that total costs and expenses outweighed revenue significantly. So they're not operating at a yearly profit whatsoever. Let's move on here. Look at consolidated net loss. In 2018, they had a consolidated net loss of 97 million. In 2019, 86 million. In 2020, right now, it's $205 million. And that's only 9 months ended September 30th. Not looking too hot for Roblox at the moment. Now let's move on here. So let's look at assets and liabilities. Now, in terms of cash and cash equivalents, that's increased dramatically. That's a good sign for this company. They increased it from $227 million in 2018 to $300 million in 2019. Now, September 30th, 2020, they had $800 million in cash equivalents. So either they're saving up for something real big, or it's just good to know that as an investor, they have a little cushion to deal with. On top of that, they are operating with a nice stockholders equity here. We can look at total assets of $1.489 billion and total liabilities of $1.436 billion. So a few million there in stockholders' equity. Not the worst thing in the world, but at least they're operating positively with assets growing significantly. And so are total liabilities, but still assets outweigh liabilities, which is a great sign to see there as an investor. On top of that, accounts receivables grew to 157 million September 30th, 2020, which is a great sign there. And we can move on here now to the consolidated operating activities. So if we look at operating activities here, we can go ahead and look at cash and cash equivalents again down there. We can also go ahead and I'm trying to read through this. The font is very small on this statement here. We already kind of touched on this, but we can look at accounts payable. That did increase to negative 1.7 million. Not a huge worry there. And now it's at 6 million in 2020. Accounts receivable, though, it was 6 million there in 2020. So not the worst thing. They owe, about $1 million in accounts payable, or $6 million in accounts payable, and then accounts receivable, it's about negative 67 million right now. Not the worst thing in the world, but also not the best thing in the world. Just something to keep your eye on. Let's move on here. This is kind of the equipment they own, property, etc. They actually own $179 million. I believe this is in millions, yeah, in property and equipment. Let's move on here. And just total accrued liabilities and total other current liabilities down there at the bottom here. You can tell it's 17 million in 2018 and 36 million in 2019. And now it's 50 million in 2020. But let's move on here and look at non-GAAP and selected financial and operating data. So bookings increased substantially. Bookings, they did $499 million in bookings in 2018, $694 million in bookings in 2019. And then they did $1.24 billion in bookings in 2020, 9 months ended September 30th. That's impressive growth. In fact, that's wild growth. From the same time period in 2020, they more than doubled the amount of bookings they were doing. So, or not number of bookings, but the total in terms of a dollar amount in bookings. From 457 million to $1.24 billion in bookings. Now, loss for operations also grew. It actually was decreasing though, which was a good sign previously. So it went from 96 million in 2018 to down to 91 million in 2019, and then it shot up to 206 million in 2020. That's a big problem, especially since you think that so many people would be using Roblox right now. Maybe that might increase expenses, operating expenses, etc., whatever it might be, general administrative costs. But I feel like they'd be doing more revenue and their profit margin would increase during these times, since the number of users and the amount of bookings they were doing increased drastically. But I guess that's not the case for this company. Go down to free cash flow here. It's about the fourth line up from the bottom of the non-GAAP and selected financial and operating data chart here. We can look at free cash flow. It increased to 292 million 9 months ended September 30th. An insane percentage increase from 2019. $5,961,000 in 2019. In 2020, they did $292,623,000. That's a massive increase in free cash flow. If we go ahead and look at DAUs, daily active users, it increased drastically as well. Almost double their daily active users 9 months ended September 30th, from 17 million in 2019 to 31,064,000 in 2020. In 2018, they did 12 million, so up significantly from that time period as well. Hours engaged in millions, so 9 million in 2018 grew to 17 million, or grew to 13 million in 2019. People spending significantly more time with Roblox, and then the 22 million in 2020, up from 9 million in the same period as of 2019. So that's great to see. And during the winter months, it's going to increase drastically as people go on winter break, spend more time with family back home during the second round of lockdowns here in some states within the United States, etc. I expect those hours engaged year ended to be way higher than the 17 million or than the 13 million in 2019. Average bookings for daily active users increased from $41.53 to $39.40 in 2019. And then, as of 9 months ended September 30th, it increased to $39.93 from the same period in 2019, which was $26.75. That's great to see there. We can move on here. Bookings, we kind of already looked at this a little bit. Same with free cash flow and net cash provided by operating activities, which grew from 101 million in 2018 to 99 million, actually a slight decrease in 2019, and then up to 345 million in 2020. Let's move on. We can see working capital as well increasing to $193 million in 2020. And we already looked at a lot of this, but we can look at stockholders' equity or deficit. So the stockholders' equity, they actually are operating at a deficit right now. That deficit is $292 million as of September 30th, 2020. I must have read something wrong there earlier. Sorry about that. The font on these charts can be very small. So that worsened from 193, a negative deficit for stockholders' equity, 193,893,000 in 2018 to 154,669,000 in 2019, and then all the way up to 292,208,000 in 2020. That's a little painful for Roblox here. Now we can go ahead and break it down by country. So in percentage of revenue, United States and Canada is 76%, Europe 14%, Asia Pacific, including Australia and New Zealand, 6%, the rest of the world is 4%. That's actually a good sign for me. The fact that it's almost all United States and Canada means they can drastically expand into Europe, Asia Pacific, Africa, India, wherever it might be, the Middle East. They can expand it drastically into those parts of the world, which I really hope they take the marketing budget and start spending it in those parts. Even if they might not have the same access to internet in some parts of the world, a lot of those countries are developing rapidly. A lot of them are just now getting full access to internet in most of the country. So they can go and really market in, India and the Middle East, parts of Africa as well. I think Roblox could really succeed in those areas. It's just a fun game, and also could give access to up-and-coming developers who need experience in those areas. I think that they definitely should focus on marketing in those areas. And also Europe. Why is Europe only 14% of revenue? It should be significantly higher than that. Europe has the exact same access to, internet, etc., as the United States and Canada, or maybe not exact same, but really close to the same there. So they should be doing very well in Europe, and it's only 14% of revenue, even if the population is slightly lower in parts of Europe. Let's go ahead and move on here, though. They have a history, and this is the one negative thing I'm going to read about. Or no, it's not the one negative thing. There's been a lot of negative things. But I usually don't read the risks associated with companies with these S1 forms because there's just so many things. It's like 3/4 of the form. And it's good information to know, but a lot of it is just repeating information we can figure out ourselves from reading balance sheets, income statements, etc. But this was an important one. So they have incurred net losses since their inception. They expect their net losses to continue in the near future. They incurred net losses of $97.2 million, $86 million, and $203.2 million for the years ended December 31st, 2018, 2019, 9 months ended September 30th, 2020, respectively. As of September 30th, 2020, they had an accumulated deficit of $484 million. They expect operating expenses to increase significantly. DAU growth does not increase to offset these anticipated increases in their operating expenses, etc. They talk about they expect their costs and expenses to increase in future periods. They intend to make significant investments to grow our business. These efforts may be more costly than we expect and may not result in increased revenue or growth of our business. In addition, we expect the cost to grow for our business. We also expect to incur significant additional legal, accounting, and other expenses, blah, 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 as a newly public company. So the main issue I have with Roblox, besides the fact that they're not a profitable company, that they're operating at a deficit, etc., and that they don't really see a clear path towards profitability right now, all negative signs, the main issue I have with this company is it kind of seems like this is an exit for execs and founders of this company. If I was operating Roblox right now, it'd be a great company, but you're operating at a loss and you want to get out, you want to make a ton of money because you've been doing this game for a while, you want to move on to some other business ventures. You take a very popular and kind of just funny company like Roblox. It's going to attract a ton of retail investors, quite a few institutional investors as well. The stock will immediately get pumped up just because of the meme of investing in Roblox. The stock will get pumped up significantly during its IPO, and that's an awesome exit opportunity for its founders and other people working high up within the company. That's a big worry of mine. Is that the case, or do they generally want to continue this company and try to make it a profitable company in the future? I really can't tell how genuine they're being with this company. It could go either way. I don't know the founders personally, so it's hard to say. Summary, shareholders' equity is growing. That's not true, by the way. I misread that, so sorry about that. That's a negative. It's the opposite of that. IPO funding and cash on hand may allow for future innovation and growth. I think there's a lot of potential innovations for this company. Net loss increased during pandemic. That doesn't add up for me. Same with, shareholders equity, which is actually decreasing negatively. That's not a good sign as well. Bookings and free cash flow are growing. That's a great sign. Revenue is growing. That's great. But if you can't make profit from that revenue, which we saw, costs were just increasing like crazy, especially during this time, which just doesn't really add up for me. And unless there's something crazy going on behind the scenes there, not a good sign. Daily active users are growing. That's great. Can that be sustained post-pandemic? We'll find out. As well as, can they appeal to a greater age demographic than 12 to 16 year olds. Sustained profitability is the main issue, as well as dealing with whether this is just an exit opportunity for execs and founders of the company. Growth outside of the US is very high potential and could definitely help increase that revenue, but whether they can actually be profitable from that is another story. Anyways, I hope you enjoyed this video. Thanks for watching. Please subscribe. Twitter at StockerFinance for more information. Check out these videos below as well. Patreon.com/StockerFinance to support the channel. And I'll see you guys in the next video. Peace out.